Welcome back. It looks like a decisively better Thursday morning compared to what we had yesterday mid-session. But let's talk about stocks. Lots of earnings reactions this morning. Our entire research team is standing by with CNBC-TV18's list of top stocks for the day. Good morning, everyone. Manglam, but let me begin with you. Eternal could be the stock of the day.
Eternal could very well be the stock of the day. There was results and then there was the management change. So let's get the management change out of the way first. Dipinder Goyal has decided to step down as CEO, will stay on as vice chairman of the board, will guide the company through its long-term strategy, culture, etc. Something that he's been doing for the last 12 to 18 months. And Albinder Dinsa will now lead the company as group CEO. What changes? Well, he moves on from day-to-day operations to look at some of the other businesses, high-risk businesses, which are outside of Eternal, but continues to drive Eternal in terms of continuity as well. So the street, while there would be some uncertainty around it, the street will be prepared to go with it in, and trust Albinder Dinsa's leadership, as we've seen for Blinkit. Now, what's good in the numbers? Food delivery NOV grew 16.6%. The street was working with a number of 12 to 15%. Quick commerce grew 121% versus the street range of 120 to 130%. But if you adjust for the GST-led price cuts, the growth is actually over 130%. So that's a positive too. The big headline for the numbers is quick commerce is adjusted EBITDA profitable in the third quarter. And food delivery margins as well at 5.4% are among the highest ever. District, the losses continue out there, but the management believes that, over 4 to 6 quarters, it will become profitable. Reported numbers, 16,300 crores on the revenue, above our poll. EBITDA, 368 crores, above our poll. And the net profit, bang in line with the street expectations. The chart of Blinkit EBITDA comes up for you right now. After multiple quarters of losses, it's finally broken even on an adjusted basis, and the street should like that. Management commentary as well, positive. They are confident to see this expand to around 5 to 6%. They're also confident of reaching 3,000 dark stores by FY27. Good confidence coming in on the food delivery as well as district and hyperpure businesses too.
Okay, all right, Mangalam, thanks a lot for that. Well, let's hop across to Ekta. She's here to tell us about Dr. Reddy's. Ekta?
Well, Dr. Reddy's might just give Eternal some competition today in terms of being a stock in focus. That is because the numbers, in fact, came in better than expectations. The revenue grew 4.4% versus an expectation of a decline. The margins came in at around 23% versus expectations of 21%. And the profit decline was lesser than what the street anticipated. What did well, and I'm not going to start with the US business as we generally do for these companies, it is the other markets. For example, India was up 19% this quarter on a year-on-year basis. We had the NRT business, which is the nicotine replacement therapy business, which was up 25% on a year-on-year basis for the company. In terms of guidance, what they've said is that the US should grow in single digits, other markets in double digits. India is a sustainable long-term growth rate, should be around 15 to 16%, at least in the medium term. 25% is a very solid average that the company is aiming for in terms of margins for FY27. That's the margin guidance that they had provided earlier. And they expect to launch semaglutide in Canada anywhere between January to May of 2026. And semaglutide will be launched in 80 markets, including India, on the 21st of March and Brazil in July 2026.
Thank you very much for that. CLSA has upgraded Dr. Reddy's but to a hold. So target price is close to the current market price, 12.10. Stock closed at 1157. HSBC, though, is bullish with the target price more than 1400. But let's go across now to Sonal for more on HPCL. How did the numbers look?
Well, the numbers have increased on a quarter-on-quarter basis, but it was lower than street expectations, especially on the refining front. The revenue is up 7.5%. EBITDA was up just 2% to come in at 7,019 crore rupees. This compares with a poll of 7,600 crore rupees. Margins lower than the poll, coming in at 6.1%. Profits were up at 4,072 crore rupees, but again, shy by 300 crore rupees versus the poll. GRMs at $8.9 per barrel compared with a poll of $10 per barrel. And they are higher, of course, on a quarter-on-quarter, and they are flat on a YOY basis. The refining throughput also declined this time, down 3% sequentially. This is despite the fact that the Visakhapatnam refinery commissioned in the quarter gone by, so there was an expectation there could be an increase there. Jeffries is an underperformed rating with a target price of 385. They say they are cutting FY26 profit estimates by 3% on the Q3 miss that came by. CLSA also has a hold with a target price of 420. They say third quarter PAT came in below estimates, so going with red on HPCL today.
Okay, all right. Thanks a lot for that, Sonal. Let's go across to Gaurav. Gaurav, you're tracking a couple of these banking and financial names, Bank of India and PNB Housing. Tell us more.
Well, let's talk about Bank of India. If you look at the numbers, the positive was net interest margins, and that is the reason going with green. First, let's talk about numbers. Net interest income, that grew almost by 6.4%, while there was support from the non-interest income. That was a non-core income, and that is the reason that if you look at PPOP, that increased almost by 30% on a year-on-year basis. Now, if you look at the profit, that has increased almost by 7.5%. But let me take you through the key positive. First is that if you look at the loan book and deposits growth, now loan book growth came in at around 13.6%. Remember, the guidance was 13 to 14%, and for deposit growth, that came in at around 11.5%, which was guided to be between 11 to 12%. Second is that net interest margins, we are seeing 15 basis point of improvement in net interest margins, and this was because of the stable cost of funds, stable yield on advances and lower cost of funds. Other than that, on the flip side, slippages that increased by 200 crores on a sequential basis. So that is something which can be taken in a negative way, and this was because of the road asset. Other than that, let's also talk about PNB Housing. If you look at the numbers, there was a bit of a weakness. Net interest income that increased just by 10%, a bit lower than the street's expectation. And if you look at profit, that increased by 7.7%, again lower than the street's expectation. If you go to ratios, net interest margins, they have declined by 4 basis points versus the street's expectation to be stable or at least see a bit of a jump in this quarter. And at the same time, if you look at the credit cost, although it is negative, it has the quantum of credit cost that has come down. If you look at the AUM growth, now that is at around 14%, but remember, management was guiding this to be in the range of 17 to 18%. In fact, there is this con call which is going on, and we'll get the comments on the management soon. But at the same time, there was a bit of a weakness in PNB Housing in terms of net interest margins as well as growth, and also in terms of disbursements. And that is the reason why going with red on this stock today.
Okay, all right. Thanks very much for that. Well, KEI Industries is the next one we're going to focus on, and we have the management joining us a little later. Upasana is here. Upasana, take it away.
Well, the revenue growth for the company stood at just 20% versus the street estimates of nearly about 25 to 30% growth. And the company's key segment, that is the cables and wires segment, which contributes nearly 93% of the total sales, dragged the top line down due to a lower growth. Now, cables and wires revenue growth stood at just 20% as compared to its direct peers such as Polycab, which reported a growth of 56% on year-on-year basis, and Havells reported a growth of 33%. So overall, if we see in the cables and wire space, certainly there's a lower growth reported by the company in its cables and wire segment. Now, coming to the margins in this segment, they saw an up move of nearly about 180 basis points that stood at 11.9% on year-on-year basis. Now, coming to the segment performance of the other segments of the company, stainless steel wire saw a revenue decline of 2%, and EPC saw a revenue uptick of 81% on year-on-year basis. Now, coming to the margins overall, the EBITDA margins are up nearly 80 basis points at 10.8% versus the estimates of 10%. This is mainly due to improved product mix. Now, margins of the company are seeing a mixed trend across the segment, with cables and wires uptick of 190 basis points, stainless steel wire uptick of 90 basis points, but EPC projects has seen a margin decline of as high as 120 basis points. And lastly, coming to the PAT of the company, it stood at 235 crores with an uptick of 42% on a year-on-year basis. So expecting a red on the back of the lower growth in cables and wires segment, but the stock might recover later in the day as the stock has seen quite a bit of a correction. So this might be factored in.
All right, thanks a lot for that, Upasana. We'll hear from the management a short while from now. Let's focus on two names that I'm tracking, JSL Stainless as well as Gravita. Start off with JSL Stainless. The numbers look good, actually. Revenue growth was only around 6% or thereabouts, but the EBITDA number was up by close to 17%. What helped them? The sales volume growth. That's up by close to around 10% on a year-on-year basis. Now, that's heartening, while on a quarter-on-quarter basis, it's more or less flattish. I calculate the EBITDA per ton on a consolidated basis, and that's popped up by close to around 5.5%. And on a sequential basis, there's a mild improvement. Remember, the volume growth, I say it's heartening in double digits because the export contribution is down to close to around 5%. That's the lowest I've seen in multiple quarters, in fact, multiple years as well. So clearly, there's some pressure with regard to the export market, which is being made up by the domestic market. The net debt on a sequential basis was down by close to around 200 crores, which is good. And in the last few quarters, it's come down substantially. Net profit pops up 27%, finance costs down, despite having an exceptional item because of the regulatory-driven cost, the labor code notification, basically. So going with green on that one, we'll have the management, later on in the show. Gravita, going with green out there as well. Remember, the revenue as well as the EBITDA includes the other income because of, the analyst calculations as well as the management calculation. The EBITDA number, that was up by 20%, the margins improved by 210 basis points, and the profitability jumped up by 25%. So besides a good operational performance, the finance cost as well is down by close to around 49%. Lead, that's bulk of their revenues, that grew by close to around 9%. There's just the core lead business revenues are up by 9%. Volumes are up by close to around 5%, and the EBITDA per ton, well, that in fact was up by close to around 10%. So put everything together, these numbers as well look good. Remember, this is a stock that's corrected 30% from the recent peak. Going across to Yash, though. Yash, you're tracking Canara HSBC Life. Tell us more.
Well, that's correct. So the numbers for the third quarter for Canara HSBC Life Insurance look very strong, no matter how you see those numbers. As far as, the three important factors are concerned, total annualized premium equivalent, that saw a growth of about 37%. VNB, value of new business, that saw a growth of about 66%. And VNB margins also, they grew by about almost 300 basis points, coming in at about 19.84% as compared to 17%. So, of course, on a year-on-year basis, the numbers look very strong, but look at what the street was also anticipating. Investec on total AP anticipated a total AP number of 900 crore. That's come at about 1,003 crore. At VNB, they expected a number of 160 crore. That's come at about 200 crore. And on margins, they anticipated 17.7%. That's come in at nearly about 20%. So numbers, as compared to street expectation, as well as on a year-on-year basis, look very strong, and hence going with green on the stock.
Thank you very much for that. And just wrapping it off with Oracle Financial Services, stable quarter. The company's top line went up 10% on a quarter-on-quarter basis, year-on-year basis nearly 15% at closer to 2,000 crore rupees. Revenue growth on a year-on-year basis has come back in double digits after 4 quarters of either one quarter was negative, but the other 3 were single digits. So that is a positive. Companies' margins and profits too are looking stable. Margins have come in at 41.7%, bottom line at 600 crore rupees, and this is after taking into account the labour code impact of nearly 49 crore rupees. So all in all, it's a stable quarter. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Eternal, Dr. Reddy's, Bank of India, Jindal Stainless, Gravita, Canara HSBC Life Insurance and Oracle Financial. Stocks with negative news flow are HPCL, PNB Housing and KEI Industries.
Okay, all right. We'll take a quick commercial break here. Up next, we have the management of EPAC Prefab join us to discuss their third quarter earnings. That's coming up. Stay tuned.